And are you guys even surprised by how weak this market has been the last couple of weeks?
I think the volatility that we've been seeing creeping into the financial markets that came in really around the beginning of October has really been triggered by the fact that the TINA trade has died. Now, TINA, just for the viewers, stands for there is no alternative, and it's been the supporting trade of this equity bull run, that investors had nowhere to go but stocks. Now what we've seen is that the risk-adjusted returns in the bond market are starting to look a little bit better, and investors are beginning to rotate. There is now an alternative, and investors are looking to take that. Move out of equities, reallocate to bonds. We're late in the cycle. Investors are putting a little bit of bubble wrap into their portfolios as protection, just in case we hit a bump in the road down the line in 2019.
Well, I guess there is an alternative, right, to TINA, which is, to your point, Alex, the bond market. Does that mean that for the majority of JP Morgan Asset Management's clients, they need to be happy with 2.5% to 3.5% returns for the next year?
I think that we can still see some opportunities in some areas of the equity markets. It's not that we're saying that investors need to move dramatically out of equities and into fixed income. What we are looking for is a little bit of maybe dialing down the risk, looking to step back into some core fixed income holdings. This is now not really the time for big, punchy bets in the equity markets. We still see some opportunities, maybe even more so after this recent sell-off, and the valuations that are being offered are quite attractive at this stage. But we are saying to investors, we're late in the cycle, dial back on the risks. This isn't a time for punchy bets. Okay, so from an equity market perspective, Alex, help us make some money. You obviously see some value somewhere. Where do you see value? So where we see some value at the moment, getting into this late cycle stage, we can actually see some opportunities in the financial space within the United States. We're also seeing some opportunities in the international markets, particularly in emerging markets. Emerging markets have had a tough 2018. The dollar has been to blame for a lot of that, but we do believe, looking out over the next few years, the dollar will begin to weaken. That'll take a lot of pressure off emerging markets. Investors who have got in there at today's very attractive valuation levels, we think could be rewarded for taking that risk in the long run.